All right, let's talk about something that's a real head-scratcher in the world of tech stocks. Imagine this. A company does everything right. They beat all the expectations, their business is booming, and then their stock just completely falls off a cliff. Well, that's exactly what happened to AMD, and we're going to break down precisely why.
So here's the paradox right at the heart of it all. On one side, you have the earnings report, a clear, undeniable beat. They made more money than anybody thought they would. But then, on the other side, you have the market's reaction, a crash. It just doesn't add up, right? This is the kind of thing that leaves even seasoned investors scratching their heads.
So the billion-dollar question is, what on earth went wrong? To really get it, we have to understand a fundamental rule of today's high-flying tech market. What you did yesterday often matters a whole lot less than what you promised for tomorrow.
And that brings us to what I'm calling the great disconnect. It's this massive gap between the great results AMD actually delivered and the blockbuster story the market demanded to hear. I mean, if you just look at the report card for the last quarter, it was straight A's. Revenue, better than the forecasts. Earnings per share, crushed it. And their most important businesses, like data centers, super strong. By any traditional yardstick, this was an absolutely fantastic report.
But here's the thing, and this quote just nails it. The big money investors, they weren't asking, hey, did you guys have a good quarter? No. They were asking, are you growing at lightning speed? Are you accelerating fast enough to truly take on the AI revolution? The past looked great, sure, but the future suddenly looked, well, a little fuzzy.
So let's dig into that. Why did this awesome report, this beat, just not matter? Well, because the problem wasn't in the numbers they just posted, it was in the forecast for the future. And it all boils down to this one critical concept, forward guidance. This is basically the company's official prediction for how much money they think they're going to make in the next few months. In a crazy fast sector like AI, this is pretty much the only thing that anyone really cares about.
And this is where the whole narrative just fell apart. AMD's forecast was, well, it was just okay. It suggested that the growth was actually going to slow down a bit, not speed up. It was still good growth, but it wasn't the explosive, rocket ship growth that investors had already priced into the stock. And the real killer? It hinted that this massive AI boom might be leveling off, at least for a little while.
Now, that weak guidance was the first big domino to fall. But believe me, it wasn't the only one. A few other cracks started to show up in AMD's perfect AI story.
First up, the China problem. What had recently been a huge market and a big source of growth for their AI chips suddenly turned into a massive question mark.
And this chart just lays it out perfectly. You see that big bar? AMD admitted that a huge chunk of its recent AI sales went to China. But that little bar next to it? That's the future. Thanks to new U.S. export rules, they said that fire hose of revenue was about to slow to a trickle. So what looked like massive global demand suddenly seemed a lot more fragile.
The other big crack is the one that's always there for AMD, the massive shadow cast by NVIDIA. No matter how good AMD is, they are constantly being compared to the undisputed king of the AI world.
See, the problem is the market had started to treat AMD like it was about to become the next NVIDIA. But this report was a reality check. AMD just doesn't have the same massive software ecosystem, which is everything to developers. That means they can't charge the same crazy prices. They're a very strong number two for sure, but the market was reminded that they're still a distant number two.
So, the story is broken. The hype bubble has been popped. That brings us to how this all snowballed so quickly. Let's look at the anatomy of the crash itself.
First, you have to understand, heading into this report, AMD stock was priced for absolute flawless perfection. It was trading at these incredibly high valuations, way above its normal levels. That price tag wasn't for the company AMD was, it was for the company investors dreamed it would become. And when your stock is priced that high, there is zero room for error. None. The slightest hint of trouble, the tiniest sign that the rocket ship might not reach Mars, and the reaction is just savage. In this case, a brutal drop of around 15% in one day.
And a drop that big creates a nasty feedback loop. It all starts with the weak guidance, which creates panic. Then the big institutional funds, the pension funds and whatnot, they start selling to protect themselves. That selling triggers automated trading algorithms, which just pour gasoline on the fire. And just like that, a sell-off becomes a full-blown crash.
So if we strip this whole thing down, what's the real lesson here? It's a tale of two competing forces. The reality is that AMD's business performance was actually really strong. But the narrative, the story that Wall Street had built around its future, was suddenly broken. And in this fight, the broken story won.
Let me put it another way, because this is the single most important takeaway. This was an expectation-driven crash, not a performance-driven one. The company didn't fail, it just failed to live up to a nearly impossible set of expectations.
And all of this leaves us with one last, really provocative question to chew on. In a market that's so clearly fueled by hype and stories about the future, has the narrative you tell become more important than the actual results you deliver? It's something to think about, for sure.